Hello guys, let me check the volume, it's working. I just registered my weekly recap and of course the audio was not registered, was not recorded. So I will comment my previous video that I just made, 30 minutes, don't worry, 70 minutes. And I will give you my insights about last week on gold. As you can see, we started the week. Today is Sunday, 30th of May. We're analyzing the week from the 21st to the 20th of May, last week of the month, last business week of May. And we closed the previous week at 1890s. Price couldn't break up. And we saw the profit taking at the end of the week when the second time price couldn't break up above the level. Correction of 200 pips and around 50% correction up, closing at 1883 key level. We'll see now the start of the week, how it goes, how it is going to react to the key levels. And it goes. Remember, it's Monday, it's last week. We will see a few hours candles ranging, because we have mixed talk about from Fed. You will see later on. Let's see price reaction. We are expecting safe buys. Now we see safe buys only above the resistance that created at 1890. We can expect, of course, a pullback to 1883 or 1876 for the gap liquidity to then push up. This was my analysis made on the 21st of May, Monday. That's what I said. I did a really good video, but the audio wasn't recording. Now we see audio is ranging. Let me check again if I'm recording. Now I'm scared. Okay. Price is reacting perfectly. The key level drops at 1876. You have a deeper pullback than sort of expected, but that's why we don't take always advantage of the sells of the pullbacks, because as Jeff told us, it's not because he told us, because it works. You never know when the pullback will stop. You don't know if the pullback will reach the key level, like he did here, or if it stops here. You can just take a sell here at this level, expect price to, okay, it will go for sure here. No, it's not necessary. The pullback might stop here and then continue with your bias. So you have to stick with your bias, which is this week was still bullish, and take advantage of when you see reaction, and then take the bias trade. You see ranging. Of course, we only take buys, thinking about buys above 1890s. We see reaction. Candle not closing at the below 1893. Traveling, yes, but not closing. We see long wicks closing at touching the same level, not confirmation of sells. The hourly candle has a big bullish rally impulse until 1887. It almost overshoots 70 pips, but closes almost at resistance. So it's of course it's a big bullish buyers in control, but not the candle close we wanted to see. We see now in the next hour, of course, we are making lower highs, higher lows, not the hourly candle we wanted to see, but nonetheless, buyers are in control. Break of the key level, retest, you can continue up as long as price doesn't break, retest on the dot. you can take big balls buy here, you can take safer buys here. The price is not making, it's creating only, it was of course creating only higher lows, higher highs, 400 pips. If you have the balls to take here at 1880 at the double bottom that we will see later on, higher risk, higher reward buys. We have safer buys when we see that the price is not closing below 1883. Of course, doing live, this is a big range, a shitty range. You can take many losses already in this range, expecting the key level to hold. That's why you have to see the bigger picture. You see price broke above this other block and is not closing below. It's getting another block here. It might create another block here. It might create another block here. That's how price moves. Let's see if I can make you okay. That's how price moves for some currencies. Order block, push, order block, push. No, very impulsive. Order block, push, order block, push. Safer buys, 20 pips. You can re-enter or add positions for 100 pips more, and take of course profit. Don't be greedy. But that breaker retest is so awesome, it's so good, so perfect. By the book, you can't ask for anything better than that. Huge drop, of course. We had mixed talk about inflation from the Fed. Look at the reaction. Look at the reaction at key levels. Perfect on the dot. It cannot close. It's not closing. It's not closing below. Look at this previous highs of last week. Crazy. It's expecting it on the dot. Not a single candle is now closing. Not a single candle is now closing below this level. Crazy. Crazy. Hinging. Try always to avoid this state. Okay, now we are Friday. You see the wedge that I created. Price is still not breaking below 1890. You see here double bottom is not breaking below, but nonetheless is creating previous high, lower low, lower high, lower low, lower high, lower low. Is going into a wedge. Of course, big support and the last week previous highs. That's why I made the analysis last week. That one, okay. And 28th. We can expect price to range a little bit, but then we can expect a deeper pullback, liquidity grab, to then push back up with an impulsive candle after closing a rejection at those key levels like 1883, 1876, 1877. We are still in a bullish bias unless we break below this huge level of 1820, 1850. Let's see. We go on the 15 minutes time frame to see the better, because it was so fast. You needed to see the 1 minute, not even the 15 minutes time frame. Let me check. I want to put the key levels on the other chart, of course. But we can see now we are expecting also the PCE data report on Friday. That's why we are so focused now at 2:30 p.m. Eastern CET, Central European Time, on the report. we are still talking about the wedge. We're still looking at the key level. Of course, I was talking about the fact that the key at the 50 minutes is traveling below that level, but there's no single hourly candle that is closed in. Okay, huge spec down. Liquidity grab, reaction on the dot at 1883 key level. Price specs back up. We had the PCE around that time. Inflation data report was higher than expected, 3.9 versus 2 point something. That's of course against inflation. What do we have? Gold. That's why at a huge spike. Why the spec down? They pull back. Liquidity grab. Investors wanted a better price for themselves. On the 1 hour, you can see it's just a week. You go on the 1 minute and you see the perfect reaction. Not a single 1 minute candle closes below the key level at 1883. We had Jevan taking buys on the run. You could have held it for hundreds of pips, but doesn't matter. We have this at this bearish longer week long tail candle. We had the PCE exactly as you can see. Liquidity grab. Many people took sell stops, got fucked. Liquidity grab, and then price spikes in the opposite direction. That's why you have to understand fundamentals and the reports, not just blindly following gurus, signals, or even calendar. Calendar will say it's good for gold, but it's not good. It's good for the USD, but it's not. And now we are ending the week with this bullish push. We're going now to the news. As I was saying, we had mixed news. We had talks about the inflation, talking about if the inflation is higher, we have tools. Oh, but the inflation will be higher. Okay, that's why we saw all the ranging in the first few days. So that's why we don't have a much clean action on gold this week. Of course, it's also the end of the week. Talks about the shortage of supply in the labor market, etc., etc. Now we move to my stupid trades. It's something that I have to fix. The taking buys exactly and only because we are going above a key level. You can see here, I could have checked the audio here, but 1883, okay, impulsive bullish, buy. Doesn't work like this. Not always. Of course, I'm keeping my stop loss small, 10 pips. I'm not taking, by trading on the 1 minute, I can take my losses small. Here we had a double bottom in 1880 during the London session, London live streams. We have a double bottom and entry. Price almost stopped out at the almost a key level. We held and we got some profits out of it, around 30 pips to start the week good. That's why we held this trade, even with this price action, it was breaking below the key level. It was not. That's why the stop loss didn't get it. A buy. This one was after the inflation talk. Price reacted to this, not key level, but to the previous highs. You can see reacted. I had an impulsive entry. The idea was not wrong. The execution was not perfect. I should have waited for price to create. I mean, we were at a huge level. We were around here, and I should have waited for price to break that bearish trend line. You see the bearish trend line? I should have waited for confirmation, but I took a buy when still there wasn't, and took a loss. But the idea was right. I mean, it's the first month. I want to have good ideas rather than perfect execution. I cannot expect to have perfect execution right now. And it actually ended up going really good, higher. It traveled then all the way up, but it's fine. It was not, of course, some emotional reaction, but it's not a problem. It's the first rounds. Again, price goes above key level. I take a buy. I take a loss. 15 pips loss. Here, I just wanted to test my trading idea. Price broke at a bearish trend line above a key level. It breaks the key level and doesn't break below. Impulsive bullish candle. I take a 1 cent lot, and I got out almost a break even. Not there, but I think later I got out after seeing the price action that was not that good. Around there, ranging, I took around there, went out. There was no confirmation of staying in the trade. Right after, price breaks below 1902 key level. There was confirmation. What price? After traveling 15 pips. I didn't want to take any partial. I wanted to, okay, I want a high risk, high reward. I want to take, I'm accepting the loss, but if I have to gain profit, I want it to go to 1897. I don't want to just take 15 pips and get out. So I accepted perfectly the loss without any emotional attachment to it. Here, stupid. I hope, about price to break below, but without confirmation. Price then retraced and stopped me out. Again, buying after key level. Of course, gold this week was playing with us because the first entry was actually good. Many traders took it, but it's fine. The re-entry, I don't know if it was good, but it's fine. We're here to learn. We're not over leveraging, we're not over trading, we're not doing nothing. This was a break even at the start of the week. And that's it. No audio. I could have checked. As I'm saying here, what I'm really proud of is the analysis. I've been doing all week, every day, the intraday analysis, regardless of having Jev doing it for us, Jivan doing it for us. I'm doing the weekly recap every week. I'm doing it for myself. I'm not doing it for YouTube. I'm not doing it for anybody. I do it for myself because I want to create discipline. I want to create a system for me. This is the first month. It will become boring. It will become pointless. I love this image that I will show right now. You got to do the same thing over and over and over and over and over again. You will reach in 10 months, 1 year, 2 years, saying, okay, but this is pointless. I'm not getting anywhere. I'm doing the same shit every day, but I'm not getting anywhere. If you stop, if you quit here, you've done nothing. If you just hold, if you just keep pushing, keep doing your daily job, your discipline job, you will see the results. High results are not over time. You cannot expect to do one and then the next day add a big push. You have to work. Mastery is done by repetition and time. You will reap the profits again, not again, eventually, later. No worries, no rush. We are here for the long term. We're not here for get rich quickly like crypto gurus. Bye bye.